Pablo, good to see you. How you doing? How you been? Evening, Miles, CMF. Jason, good to see you. So how you doing? How you been? Kali, good to see you. So how you doing? How you been? Autistic, good to see you. So how you doing? How's everyone doing today? How's everyone's day? Good evening, Miles and CMF. Free and forever. Good to see you. So how you doing? Okay, let's do. Miles, how you doing, man? I'm doing great. Theo, good to see you. So how you doing? Let's do intro, disclaimer, what we're going to go through on tonight's live. By the time everyone should be tuned in for the first part of the live. Good evening, brother Miles. Good to see you as well. Thank you, brother. How you doing? Hey, Miles. Hope you're well. T, good to see you as well. Hope you're well as well. How you doing? Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. long time onwards. For the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, this is episode 400 of the CMF Live. So this is amazing that we're at episode 400 right now. And if you do have any questions, put it down inside the comment section. More than happy to help you out. So on tonight's live, we're going to be talking about essentially Trump's footsteps inside the market space and why the crypto market space has decided to finally wake up. We're also going to be going through essentially quite a bit of Ripple news on tonight's live as well. But there's also a lot of things happening in terms of the UK or South Korea or the US in general. So a few things to essentially go through on tonight's live. But before we do any of that, let's go inside the comment section first. And then we'll go straight to the first news. So let's see where we're at first inside the comment section. We were at good evening, Miles. It's CMF Free Forever. Good to see you. What are you doing? Miles, how you doing? Theo's good to see you. How you doing? Good evening, brother. Okay, we're here. Good evening, CMF. Let's go funky, brother. Good evening, Miles. How are you today? I'm doing great, Michael. Good to see you. How you doing? Crypto is waking up. I agree 100%. Yes, crypto is definitely waking up. Hi, Miles. Good to see you, Autistic. How you doing? Congratulations on getting to episode 400. Let's go. Love you all. Thank you so much. Star, thank you so much for that kind comment. Now, let's go to the first news on tonight's live, which is regarding why the crypto markets have picked up. And by the way, thank you so much to everybody who has already smashed the like button and smashed the retweet button for the live show straight away while the live show has started. And if you're watching this on YouTube, thanks so much to everyone who's also smashed the like button as well. If you haven't, like, retweet if you haven't already. Now, Trump, the first news to go from tonight's live and why the crypto markets have picked up. Unexpected turns in essentially Trump's tariff battle before the Supreme Court. A significant day unfolds as the Supreme Court essentially elevates the tariffs introduced by Trump, raising crucial essentially implications for both global trade and the cryptocurrency markets. The overturning of these tariffs, which would reverse essentially the progress made in the past months, is at the center essentially of this judicial review right now. The judge right now is essentially deciding whether these tariffs that Trump essentially put on the entire world or the market space in general was good or bad. It seems like the judge wants to overturn everything Trump has done, hence why the crypto markets essentially are rising, because there's no more tariffs. Apparently what this judge is trying to do. The primary focus is on the legitimacy and scope of executive power that allowed these tariffs in the first place to happen. In today's session, Trump's essentially lead attorney faced intense scrutiny regarding the authority under which the tariffs were implemented. The opposition to these tariffs essentially seemingly holds a stronger case. Judges expressed doubt over Trump's use of the 1977 economic emergency law to justify his actions, questioning if such laws allow essentially unliteral essentially policy shifts by the sitting president, challenging essentially Trump's defense. Chief Justice John Roberts, Justice Neal, essentially, and others refer to the major questions doctorated. This legal principle emphasizes that laws not designed for broad infrastructure essentially changes should not be enable extraordinary executive powers. This argument also has previously been effective against Biden's administration on separate occasions. Essentially, lower courts previously disfavored Trump's tariffs actions. Observations from today's hearing suggest a repeat of this trend. Consistence, essentially including the states and small enterprises, argued overreach by Trump and disagreeing essentially congressional authority. Trump's essentially recourse involves pushing these tariffs through the Congress via straightforward vote, a strategy lacking unanimous party support. Should the Supreme Court strike down the tariffs, financial repercussions include refunding billions. This money embarked by Trump for debt reduction and citizen checks, mirroring pandemic reliefs, would need a new allocation strategy, creating potential political backlash. A decision from the court against Trump would mean redirecting tariffs initially proposed for citizens and relief checks. Legal experts highlighted essentially the ripple effects of this case should heighten political tensions and market unpredictability, impacting the cryptocurrency sphere. Also, optimistically, abolishing these tariffs could prompt international tariff essentially negotiations, alleviating inflation fears. This scenario might favor cryptocurrency values based on expectations of a swifter monetary policy adjustments, while a decisive verdict is anticipated later. Earlier essentially insights point towards unfavorable outcomes for Trump. If the judicial opinion aligns with lower courts, it may essentially symbolize essential challenges to execute power and its policy making essentially limits. So the reason why the crypto markets did pick up today is because apparently tariffs will completely be going away. There'll be no more fear or inflation essentially rises inside the market space. Hence why the crypto market decided to essentially, rise up today. Now, moving on from that to BlackRock. Also, Trump did point out that he's going to put an end to all this crypto essentially nonsense of stopping the crypto market space or stopping crypto innovation. And today he also pointed out that the stock market and the markets in general should start doing better. And he's open to the idea of opening up the US government. Yet we still do need the Democrats essentially to vote in as well. Now, moving on to essentially BlackRock. BlackRock essentially has, we have some data coming up that has dominated the tokenized treasury market space right now. But competitors are essentially gaining ground too. The US tokenized US Treasury markets continues to expand rapidly, with BlackRock built fund essentially maintaining a commanding 33% market share right now, according to data from RWA.XYZ. However, competitors including Franklin Templeton, Circle, and Ondo Finance are accelerating growth, suggesting that the sector may be entering a new phase of essentially diversification. BlackRock's $2.85 billion built fund remains the clear essentially leader in the tokenized treasury markets, reflecting institutional confidence in the assets manager essentially on-chain strategy. But the data does show that other issuers are quickly also closing the gap. So more institutions are essentially widening their positions inside the crypto space, which again is helping the crypto markets right now. Circle now holds roughly about $866.6 million in tokenized treasuries, a 19.5% increase over the last 30 days. Franklin Templeton follows closely with $852.2 million, raising nearly 18.8% in the same period of time. Ondo Finance's combined products and Ondo USDY collectively also manage nearly $1.48 billion, further underscoring growing institutional adoption. Rounding out the top 10 are essentially Wisdom Tree, Superstate, and Fidelity Investments and Treasury Bills Limited, showing that both traditional financial institutions and crypto native firms are now actively also competing in this essentially market segment. Despite the impressive growth, access to tokenized treasuries remains largely limited. Only qualified purchasers are typically eligible to invest directly into these essentially asset types, and secondary market face structural barriers such also as well. These factors currently make tokenized treasuries less flexible than their traditional counterparts, though the proponents argue that as infrastructure matures, these inefficiencies will essentially narrow. Now, the tokenization of real-world assets, essentially particularly in US treasuries, is widely regarded as one of the most promising applications for blockchain technology. Global demand for yield-bearing on-chain instruments has also surged throughout essentially 2025 as institutions seek a much more transparent and programmable fixed income alternatives as on-chain treasury markets approach $9 billion in total capitalization, and analysts expect broader access and regulatory clarity to trigger the next wave of growth, potentially positioning real-world assets as a new standard for digital assets-backed liquidity. So not only essentially we have the side of, essentially Trump mentioning the stock market, the crypto markets, and the government shutdown needs to end, and also judges thinking about removing all these tariff policies. We're also on the other side of the spectrum have the institutions widening their essentially scope inside the crypto market space, especially in tokenization, bringing quite a bit of liquidity towards the table. And BlackRock, as usual, is leading this. Now, moving on essentially from BlackRock and the US to the United Kingdom. Now, obviously, we had that essentially sit down with Keir Starmer and Trump discussing what they could be doing inside the tech space together, and also the discussion that they had of a digital sandbox between the United Kingdom and the US. Well, now we have an update, more of an update of what the UK is deciding to do. Now, the UK did decide previously that they want to put a cap limit on how much stablecoins can essentially somebody hold. And the cap limits were quite ridiculous, but it seems like the UK is standing by that for the time being, but they're calling it a temporary cap limit. So this is what I mean. Essential UK stablecoin regulations align with US approaches up to a certain extent. According to the Deputy Governor, essentially Sarah Breeden, the Bank of England plans to implement specific holding limits as a part of their essentially stablecoin regulations. These limits include temporary caps of £20,000 per individual user and also £10 million for corporations. That is a cap. Nobody can hold more than that in stablecoins in the United Kingdom. This approach ensures that the UK stablecoin regulations maintain consistency with international standards while protecting consumers essentially in the same sense. The alignment of stablecoin regulations between the UK and the US represent a significant step towards global cryptocurrency standardization. Moreover, this coordinated effort also helps prevent regulatory, essentially arbitrary, and creates a more predictable environment for businesses operating in both market spaces. Stablecoin also regulations serve essentially multiple critical purposes inside the cryptocurrency ecosystem. First, they provide consumer protection against potential market manipulation and fraud. Second, they establish clear guidelines for businesses operating in this space. And finally, proper stablecoin regulations help maintain financial stability by ensuring essentially these digital assets don't pose systematic risk. Now, consumer protection, the limits essentially prevent excessive exposure to single assets. Market confidence, also clear rules encourage institutional participation. Financial stability prevents the systematic risk from unregulated growth, and international cooperation aligned approaches and reduce regulatory conflicts. The implementation of these stablecoin regulations will likely have immediate effects on how users and businesses interact with these digital assets. So if you're somebody inside the United Kingdom, they're saying that they're aligning themselves with essentially international law in the UK regarding cryptocurrency and stablecoins, that there's a limit of how much stablecoins you can hold, £20,000 if you're a retail member, if you're a corporation, £10 million, and you can't go beyond that for temporary stages. Now, these stablecoin regulations also create opportunities for innovation, is what they're calling it, in custody solutions and risk management tools. Financial technology also essentially companies can develop products that help users comply with these new requirements, with maximizing their operational efficiency within the regulatory framework. While the alignment of stablecoin regulations between the UK and the US provides clarity, essentially, it essentially also introduces certain challenges. Market participants must adapt to new compliance requirements and reporting standards. Additionally, the temporary nature of the essential holding limits means businesses need flexible systems that can accommodate future regulatory essentially changes. However, the benefits of having clear stablecoin regulations outweighs these transitional essentially challenges. The framework provides much needed clarity also for investors and businesses alike, potentially accelerating mainstream adoption of digital assets. They're saying basically this could push the United Kingdom towards stablecoins and cryptocurrencies, but it is a bit odd that they're starting it with a cap of 20,000 essentially pounds, nothing beyond that if you're a state essentially, if you're a retail member. Now, they haven't stated how they're going to be able to monitor this scenario, that if you are a retail member, you have a cap limit of 20,000 essentially. I'm guessing it has to be linked to some sort of governmental app, because if it's through Tangent or Ledger or Trezor or Trust Wallet, the UK government, or any government in that matter of fact, cannot be able to put a cap limit on how much stablecoins you can hold. The Bank of England's announcement about stablecoin regulation marks a pivotal moment, yes, for sure, for the cryptocurrency industry. By aligning with the US approaches, the UK demonstrates its commitment to fostering a secure and innovative digital asset regulated ecosystem. These stablecoin regulations balance innovation essentially also with necessary safeguards, creating a foundation for sustainable growth. As these stablecoin regulations take effect, market participants should prepare for increased compliance requirements with recognizing the long-term benefits of regulatory clarity. The coordinated approach between major financial centers sets a positive precedent for global cryptocurrency regulations also. So the UK is saying that they're mirroring the US when they're introducing this, and they want to bring innovation into the United Kingdom when it comes to the cryptocurrency sector, obviously starting with their stablecoin regulations, just like the US did with the Genius Act. However, inside the Genius Act, inside the United States, they didn't put a cap limit of how much stablecoins you can hold. It's just that stablecoins were regulated. In the UK, they're going to be regulating stablecoins, but just putting a cap limit of £20,000, and they're calling it a temporary stage of £20,000. And once we pass that stage, it would increase. And I think this should essentially bring more innovation. I agree, it will bring more of innovation, but it will also bring more innovation if they just remove the cap limit. But I still don't know how they're going to be monitoring it because they haven't mentioned it in any sort of a way. Now, moving on from the US, the UK to South Korea is what we're going to talk about next. But before we go through South Korea, let's go inside the comment section first. And let's see what's going on in there. As I said previously, this is live, which means if you do have any questions or comments, put it down inside the comment section. More than happy to help you out. So let's see where we're at. Hi, Miles and family. Alex, good to see you as well. How you doing? Hello, Miles and CMF family. Let's go to Facts News, my friends. Let's go, Carl. Good to see you as well. Wonderful. Episode 400. Let's go, Callie. Hello, Miles and CMF. Comatose, good to see you as well. How you doing? Hi, Miles and all CMF. Hope everyone is good. Ronnie, good to see you as well, brother. How you been? Long time. Good evening, Miles and CMF family. How are you doing today, boss? Good to see you as well, Carlos. How you doing? Good evening, Miles and CMF. Bullocks up, you good to see you as well. How you doing? Morning, Miles and CMF. Shelly, good to see you as well. Morning, how you doing? Hi, Miles. We all see a switch type rate rise, essentially 22nd of November, as that's what is being reported. Yes, Paul, it is true. There is a switch type of scenario going on around 22nd. That's true. Good evening, Miles. Can't wait for another exciting evening off you. Let's go, Addy. Good to see you. How you doing? Is that daily, weekly, monthly, yearly, low? And regarding the United Kingdom, in terms of how much stablecoins you can hold, it's in general a cap. So it's not based on monthly or weekly or yearly. In general, it's just a money cap. You cannot own more than £20,000 worth of stablecoins in general. Now, it's a step. I mean, the UK is very slow inside the crypto space, but they're making some steps, finally. Now, regulatory blockchain. Loans in South Korea. So we're going to move on from the UK and the US and go into South Korea. Now, why is South Korea important for you if you live somewhere else around the world? Well, what South Korea is introducing regarding inside the crypto sector is quite interesting. It's also because to do with pension funds, loans inside the crypto sector, and so on. And it could be something that could be implemented in your jurisdictions somewhere down the line. So it's just good to know about it. South Korea is making waves in the world of financial technology, taking a bold step towards the future. The nation has officially launched a pioneering blockchain loan service for its retired public officials, promising a new era of efficiency and security in financial transactions. This innovative move, spearheaded by the Korea Financial Telecommunications Clearing Institute, the KFTC, in collaboration with the government essentially employees pension services and 11 leading also financial firms, began rolling out on November 5th. It's not just essentially a minor upgrade. It's a fundamental shift in how pensions can work essentially when it comes to cryptocurrencies and loans. At its core, this new system leverages a shared financial, essentially blockchain. Imagine a highly secure, tamper-proof digital ledger that instantly verifies information. That's exactly what's happening here in South Korea. When a retired public official applies for a loan, the system can immediately issue a verified digital certificate of their pension payments. This eliminates the significant amount of traditional bureaucracy someone has to go through. For example, when it is time for people to get their pensions, there is a few essentially hoops people have to jump through, legal hoops, before they can reach their pension money through the government. But with this new system that essentially South Korea set up through blockchain, within seconds, somebody can get access to their pensions, which is brilliant. Essentially, this blockchain loan service streamlines the entire application process, making it faster, safer, and more convenient for everyone involved. For retired public officials, the advantages are clear and immediate. Think about the time saved and the peace of mind gained. Applying for a loan can often be essentially a very long process filled with paperwork and delays. However, this new system changes the experience dramatically. It empowers individuals with quicker access to necessary funds, reducing stress and administrative essentially burdens. Moreover, the enhanced security features mean also that personal financial information is better protected. This builds greater trust in the financial system and also gives users confidence that their data is safe from manipulation. While the benefits are substantial, the also adoption of this new technology, especially as one transformative as a blockchain loan service, can come with its own sets of challenges. One primary consideration is user education, ensuring that all retired public officials are comfortable and familiar with the idea of digital currencies. And furthermore, the seamless integration with various financial institutions requires a robust technical infrastructure and ongoing collaborations. Regulatory frameworks also need to evolve to fully support and govern such innovative, essentially blockchain-based financial products. However, South Korea's proactive approach also suggests that they are well prepared to navigate these hurdles moving forward. South Korea's initiative is also a powerful testament to the potential of blockchain beyond cryptocurrencies. It demonstrates how this technology can be applied to traditional financial services to create more efficient, transparent, and secure systems. This successful implementation could serve as a blueprint for other countries and financial sectors to follow in suit. We might see similar blockchain-based solutions emerging for various types of loans, identity verifications, and even supply chain finance in the near future. The move by KFTC and GEPS is truly a forward-thinking step in South Korea. In conclusion, South Korea essentially launches the blockchain loan service that essentially for retired public officials that was needed because the process of these essentially loans and applications of pension funds were absolutely long and treacherous. Not anymore because of blockchain technology. And I do believe that other companies will essentially, other essentially jurisdictions around the world will follow in suit. We're definitely going to be seeing blockchain integrated, as they would say, beyond cryptocurrencies, blockchain integrated more in the financial sector, in pension funds, in loans, in family offices, in essentially VC companies, in major institutions, or even small-time businesses going forward. So it's brilliant to see that's happening in South Korea right now. Also, moving on from that news to Tangem. Tangem has just partnered with Visa to launch a self-custody crypto bank card. If you are somebody that uses Tangem for cold storage wallet, well, Tangem is about to be introducing their bank cards to their users, which means if you want to spend your cryptocurrencies, you can spend them directly through your Tangem account. You no longer need to essentially move your crypto assets around into, for example, an Uphold account or essentially a Binance account or essentially a Coinbase account to get access to these bank cards, Coinbase card, Binance bank cards, or Uphold's bank card. You can do it directly through Tangem. So Tangem, the Swiss fintech firm, announces Tangem Pay, a Visa-backed stablecoin card with self-custody wallet launching in November across the US, Latin America, and Asia Pacific. This collaboration highlights increased integration of digital assets and retail payments, ensuring security and user ownership, potentially reshaping consumers' trust in crypto transactions. Tangem, the Swiss fintech firm, is set to launch this Tangem Pay chip. Essentially, this innovation enhances crypto asset integrations in global retail payments while ensuring user ownership and security with it. The launch positions Tangem and Visa as leaders in merging crypto with retail, promoting user-centric ownership. With Visa also offering extensive payment networks, Tangem Pay could potentially transform how digital currencies are used by consumers worldwide. Experts suggest Tangem Pay might influence increased crypto transactions, leveraging Visa's robust network. This could lead to financial and technological advancements for crypto, essentially for crypto adoption, noted for its security and user control focus. As essentially Q, the Sheffield VP head of crypto at Visa, said, This is what Visa had to say regarding this announcement. At Visa, our commitment to security is ingrained in our pursuit to help evolve the crypto ecosystem. With our partnership with Tangem aimed at driving the creation of next-gen payment solutions, we are excited to work with Tangem to help enable effortless payments with digital currencies designed with security in mind. Tangem's launch contrasts with past crypto cards requiring custodial accounts. It highlights efforts to essentially provide genuine asset control, unlike previous offerings from companies like Coinbase and Crypto.com with necessitated accounts pre-funding. Experts believe Tangem Pay can revolutionize self-custody solutions for crypto payments as digital asset spending expectations grow. Such innovations align with rising demands for secure, user-managed crypto payments and setting a fresh industry standard. It's a brilliant idea if somebody wants to essentially spend their cryptocurrencies quite quickly, essentially through Tangem. And if somebody doesn't have a Tangem wallet, if you do have a Tangem wallet, they're actually quite easy to get and easy to set up. And the idea of having a Tangem bank card with it just makes life 10 times easier. But obviously, you will have to know that regarding, once you, the way they're doing it is in a way where it's not similar to essentially centralized exchanges when you get a bank card. It's much more privacy related compared to essentially a Coinbase, essentially bank card, and so on. Now, moving on from Tangem to Canada, there's quite a lot of news happening around the world, and it's mostly to do with stablecoins. But before we go through essentially Canadian news, let's go inside the comment section first. Let's see what's happening, and then we go straight into the Canadian news. So let's see where we were at. Inside the comment section, we were here. Hello, Miles, the CMF. Good to see you as well, LJ. How you doing? How you been? Is this XRP blockchain making this possible in Korea? Ronnie, great question. The XRP ledger does play a huge role in South Korea. Sometimes XRP, in terms of purchasing, essentially outweighs Bitcoin and Ethereum. In some cases, it outweighs both of them at the exact same time, to be fairly honest. So it could do. We don't know which blockchain they're using in any sort of way, or which essentially blockchains they're going to be using, because it might not be just one, it might be more than one. Now, I hope we get access in the UK for Tangem Bank Card. Unfortunately, I don't think it's going to be available in the UK. They did say it's going to be available essentially first in the US, Latin America, and Asia Pacific. So any Asian countries, including Australia also, could get a Tangem bank card. Anybody in Latin America, anybody in the US can get a Tangem essentially bank card. Anybody else in Europe, unfortunately, it's not available for us yet. And it is due to essentially the United Kingdom not having the proper regulations in place, and also the EU still having some few hurdles to jump through in terms of their regulations. But sooner or later, it will be available to us as well. XRP is recognized as a property in India and it's stolen, and if it's stolen, you can file a report. That is brilliant news, and I did hear about it today regarding XRP. Now, we're going to go through quite a bit of XRP news on tonight's live. But yes, regarding India essentially recognizing XRP as essentially an asset, it's as property, basically, it's incredible news, to be fairly honest. It does still put XRP, as I always like to say, in a different league. Hello, Miles and CMF. I hope that everyone had a good day. Scott, good to see you. How you doing? Share the live. Let's go, Scott. Now, Canada. Any news on XLM? Not so much. Canadian lawmakers target stablecoin legislation. Stablecoin regulations are becoming a massive deal right now. Every country wants to be involved. Lawmakers in Canada are turning their attention to the digital financial landscape now, focusing especially on legislation surrounding stablecoins backed by essentially Canadian dollar. This move comes in response to regulatory shifts inside the United States that has prompted essentially other jurisdictions to reevaluate their own strategies, hence why the UK is thinking about it now, and so on. The legislation suggests a growing interest in accommodating the evolving financial ecosystem while maintaining national financial security. Cryptocurrency enthusiasts and stakeholders have welcomed this initiative, viewing it as a necessary step within an increasingly digital economy. Recent developments in the US and the financial, or particularly the Genius Act, which essentially passed, have generated widespread discussions among Canadian lawmakers. They believe that adopting similar frameworks could enhance their oversight and control over digital assets. Stablecoins backed by essentially traditional currencies like the Canadian dollar are seen as a pathway to integrate cryptocurrencies without losing their regulatory control. This perspective also underscores the importance of keeping pace with global developments to ensure financial stability and competitiveness. The prospects of a Canadian dollar-backed stablecoin has gathered attention within the crypto community, emphasizing the regulatory clarity that such legislations might provide. Leaders in the sector have openly expressed their optimism, arguing essentially for potential benefits of such essentially legal initiatives. Stablecoin legislations is a significant move towards regulating digital currencies and effectively while embracing innovation, noted a Canadian financial expert. The crypto sector views these developments as a vital step towards a well-regulated, transparent crypto environment. Because this is brilliant news. What the US did with the Genius Act essentially made other countries think about their footsteps inside the crypto space and follow in suit. With South Korea following America's footsteps in terms of the crypto space and the stablecoin space, so did the UK today, and Canada's thinking about it today. Also, Hong Kong is thinking about it, Japan is thinking about it, Singapore is thinking about it. The list just goes on. Also, several challenges do remain on the horizon for the Canadian lawmakers. Balancing innovation with risk management is a primary concern, as improper handling could lead to financial instability. Another issue involves the technological and infrastructure adjustments needed for the implementation of such measures. Financial systems require robust security to ensure seamless integration and prevent misuse. The best system out there, in my point of view, would be Ripple custody for Canada if they're looking for a robust and secure system. The real trust lies in addressing security and regulatory challenges that accompany essentially digital currency legislations, stated a policy analyst, which I fully understand why the main concerns would be that for any country or any government or any jurisdiction out there. Again, Ripple custody will solve all of those essentially all of these issues for Canada's government. One of them being security. Ripple custody can solve that issue for them. The other one being essentially the regulatory challenges, which Ripple essentially in terms of XRP, it is regulated. So is Ripple in terms of the United States. Policymakers understand that there is a delicate balance between encouraging technological innovation and maintaining financial oversight. Legislators also aim to construct a framework that mitigates the inherent risk to cryptocurrencies markets while granting essentially a certain degree of freedom to stakeholders. This approach is likely to set a precedent that could influence other countries, also illustrating how traditional financial foundations can coexist with emerging digital finance systems. A keen understanding of the evolving landscape is critical, as regulatory transparency could either catalyze growth or limit potential. Legislators and financial experts and crypto stakeholders continue to work towards essentially a mutual goal, creating a secure yet flexible regulatory environment ideal for the ongoing transformations of financial systems. Also, the coming months will be crucial to see the long-term impacts of these legislative measures on both the national and international essentially stage as well. So if you are a citizen of Canada and you're worried about how far Canada is falling behind in terms of the crypto regulations, well, Canada has finally decided to take one step forward, and the first step they're taking is stablecoin regulations. It's a brilliant step to take, because the second step is going to be something near to a Clarity Act. Now, moving on from the UK, the US, Canada, South Korea to the EU. The EU has decided to plan to expand its ESMA powers, but it's sparking a debate over crypto innovation and market control. Before we talk about the EU on tonight's live, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, put it down inside the comment section. So let's go for the comment section first, and then we'll go straight into the EU news regarding the crypto market space. I hope we get, no, okay, we were here. Okay, we're here. Miles, what if I hold in UK, for example, amount of £100,000 in crypto? Is that going to be over the limit? Yes, but they're saying stablecoin limit, not crypto limit. Okay, I have to clarify one thing. Regarding the UK regulations that I read up, the UK is putting a cap. Well, the Bank of England is the one suggesting this. The UK is going to put a cap on stablecoins, not cryptocurrencies. So you can hold $100 million in cryptocurrencies. They don't care. The UK is going to be putting a cap on stablecoins. If you're a retail member, you can only hold £20,000 in stablecoins temporarily. If you're a corporation, you can only hold £10 million per corporation, essentially, in stablecoins. When it comes to cryptocurrencies, the sky is the limit. They haven't put a limit on cryptocurrencies, just on the amount of stable coins you can hold. So British pounds, in other words, digital British pounds, you'd only be able to hold in terms of stable coin, £20,000 max, retail 10 million as a corporation. But cryptocurrencies, the sky's the limit. I hope that clarifies it. Sorry if I didn't clarify it properly at the beginning. Good day, Miles and CMF. Sorry I'm late. Mike, no problem. Good to see you. How you doing? Share the live. Let's go, Scott. We've all been around the world tonight, Miles. Let's go, Ronnie. Share the live. Hi, Scott. Okay, now, the EU. A new European Commission planned to expand the powers of the European Securities and Market Authority has stirred debate across the continent. The EU is thinking about controlling the crypto space even more, which some are saying that it could, turn into strict environments and stop innovation or slow down crypto innovation in the EU. Some are saying a lot of regulations is good for the market space because it makes it mature. So there's both sides of the spectrum. Now, obviously, I understand that too many strict rules will stop innovation. And also, they're comparing what the EU is trying to create, something similar to a SEC. Regarding the EU, every country in the EU essentially has their own, governments and their own parliamentary system and so on, which essentially have their own voting system, their own regulations, their own laws, and so on. What the EU essentially is deciding to do is create some sort of an SEC that controls the entire EU when it comes to their financial decisions, for example. And that's what the crypto essentially, community is afraid of, the EU's control, the centralization they're about to be creating. The proposal aims to tighten regulatory consistency across crypto financial markets. However, critics warn that the move could slow innovation and reduce agility within the Europe's essentially growing fintech sector. The Commission is expected to publish a draft proposal in December extending the ESMA's jurisdiction beyond securities and capital markets to include cryptocurrency services and providers. Basically, the plan would centralize supervision at an EU level, creating a system similar to that of the US's SEC. Under the Markets and Crypto Asset Regulations, the MICA, which took effect in December 2024, crypto companies licensed in one EU country can passport their authorization to operate across all 27 member states. This system has been viewed as a key competitive advantage for Europe's digital asset industry because it's a brilliant system. You get access to one European country with a license, you get access to all of them as a crypto company. Industry leaders fear that the growing, essentially giving the ESMA a full control could create a bureaucratic delays and discourage new, essentially, innovation. Now, the head of public affairs at Decentralized Lending Protocol essentially warned that such centralization could also overwhelm the regulators and slow progress for younger firms. The EMSA essentially supervision would likely slow down decision-making and innovation, particularly for newer essentially players inside of crypto and fintech companies who rely close collaboration with their domestic regulators. He also suggested a middle path in which the ESMA strengthens its oversight of national regulators instead of taking essentially over all decision-making. In her view, granting the ESMA the power to suspend or even revoke licenses could improve accountability without removing local flexibility. Concerns have also grown after France's securities regulators suggested banning the passporting of crypto licensing under MICA, which essentially warned that such a move would undermine one of Europe's main advantages in global crypto markets. She maintained that the EU's passport remains the foundation of the MICA, that removing it would deprive crypto businesses of a single market benefit that makes the Europe competitive. Some policy experts believe the ESMA expanded powers could still essentially bring positive change if implemented carefully. A stronger EU-level regulator could help fix the inconsistency in how the MICA and Digital Operations Resilience Act are essentially applied across member states, improving the overall market trust and resilience. The director of policy at Fireblock said unified supervision approach could help address operational risk and strengthen the stability of Europe's digital asset system. So, France decided to tell the EU that if a crypto company wants to operate in the EU, it needs to have licensing pretty much from every EU country, which is a stupid and absurd thing to say. The only reason France even mentioned this is because France is broke. and crypto companies have liquidity, a lot of money. I mean, we're seeing essentially back-to-back announcements of Ripple buying out companies for over $1 billion. And there's so much other things that are happening inside the crypto space. There's a lot of liquidity in crypto, and France is broke. It has a very crippling, essentially, real estate economy. And, well, we did all see the news where their president essentially decided to leave, for example. Now, some are also suggesting that the EU, going down this path of the SEC version that the EU is going to be having, it could be a good thing because then it's one decision unified by all rather than everybody has an input. So there are pros and cons to this scenario. And the cons would be if France's suggestion wins, because it's just a stupid suggestion to begin with. If essentially any crypto company has a license from any European country, it should just operate within all of them because it's an EU as a whole. If there were separate countries, it was very understandable. But because they're under the EU, it makes more sense to be, a unified license. And the idea that an SEC would control and make the market space more centralized in the EU, true, but it would be unified, essentially, results. So one thing passes, everybody's under it, rather than, oh, France doesn't agree, but Germany agrees, and Spain's thinking about it, or Italy's thinking about passing it, because it would just be too long and treacherous. So that's why even Fireblock's CEO said it kind of makes sense to have a very, their own version of SEC where every European country just agrees to the same thing instead of going back and forward of every country. Now, Ripple is what we're going to talk about next on tonight's live. Quite a bit of Ripple news to go through on tonight's live. And the first news being Ripple secures $500 million investment to boost XRP growth in 2025. Ripple has announced a $500 million investment led by Fortress Investment Group and Seattle Securities to bolster XRP growth, confirmed by their CEO, Brad. The investment underscores Ripple's expansion in digital currencies, Ripple's essentially expansion in digital currency markets, enhancing XRP's potential also for growth in 2025. As recognized by essentially major financial institutions, Ripple has secured a $500 million investment at a $40 billion valuation led by Fortress Investment Group and Seattle Securities. This strategic move follows Ripple's strongest year to date, aiming to solidify XRP's essentially growth by 2025. The investment also involves institutional giants like Seattle Securities, Pandora Capital, and Galaxy Digital. Ripple's CEO Brad Garlinghouse essentially emphasized this initiative as a validation of Ripple's market opportunities and aggressive pursuit for growth. This is incredible news for XRP, for Ripple, for the XRP ledger. This investment is anticipated to increase liquidity and demand for XRP, directly impacting the crypto markets. Hence why XRP was doing quite well today. The involvement of prominent financial institutions reflects growing confidence in Ripple's strategy and expertise. The $500 million funding will bolster Ripple's expansion in custody and stablecoin sectors. This move is expected to improve Ripple's market standing and its ability to attract institutional clients. Brad, also the CEO of Ripple, stated, "This investment reflects both Ripple's incredible momentum and further validation of the market opportunity we're aggressively pursuing by some of the most trusted financial institutions in the world." Sourced by Brad Garlinghouse statement underscores Ripple's commitment to expanding its crypto offerings. The company's strategic essential investments in the past years have laid the foundation for its latest development. Potentially, regulatory changes and technological innovations may further shape Ripple's trajectory, and historical trends do indicate that acquisitions could drive price appreciation and adoption for its tokens, especially XRP. That is incredible news. I mean, these are big corporations that are helping Ripple essentially raise funds for XRP, $500 million. And to be fair, one of them, Galaxy Digital, was not a fan of Ripple or XRP. Somewhere down the line, Galaxy Digital's CEO came to the realization that Ripple is really changing the financial sector. And he became a fan of XRP, and he became a fan of Ripple. And today we can see his name on the list of essentially corporations who are essentially raising money for Ripple. Now, also, Ripple partners with MasterCard to test RLUSD for fiat payments. Some of you might have seen this news, some of you might not have seen this news, but here's the details of it. Ripple has announced a new collaboration with essentially for fiat payments using Ripple's RLUSD on the XRP ledger. The initiative essentially unveiled at Ripple's Swell 2025 event in New York, which is still going on, aims to demonstrate how blockchain can enhance the back end of traditional payment systems by speeding up settlements and lowering costs and improving transparency. The partnership bridges two worlds, traditional banking and blockchain-based finance. MasterCard and essentially WebBank, the issuer of Gemini's credit card, will test RLUSD for settlements between card transactions. Instead of clearing essentially through conventional intermediaries and funds, could be moved and recalled as essentially on the XRP ledger, a public ledger designed for secure near-instant payments also. Sherry Hyman, the essentially MasterCard's global head of digital essentially commercialization, said partnerships reflect essentially the company's principled approach to stablecoins, noting that MasterCard is committed to consumer protection and compliance while exploring the next evolution of digital payments. If fully implemented, this would be one of the first cases of regulated US banks settling card transactions with a regulated stablecoin essentially on a public blockchain, a potential blueprint for the future financial infrastructure. This is incredibly big news that Ripple is essentially doing as a partnership of XRP Ledger with MasterCard. Stablecoins like RLUSD are digital assets pegged to fiat currencies, which everybody's very familiar with inside the cryptocurrency sector. RLUSD is fully backed by cash and cash equivalent reserves and regulated under the New York Department of Financial Services since 2024, its launch. It has also surpassed $1 billion of circulation, signaling a much more earlier, essentially institutional trust in Ripple's stablecoin model. Jason Lloyd, the CEO of WebBank, called the effort a bridge between blockchain innovation and banking stability, while Gemini's CFO Dan added that this pilot connects blockchain innovation directly to real-world payments. The collaboration also reflects MasterCard's expanding footprint in crypto. Last month, it advanced its partnership with Chainlink to pilot cross-chain essentially payment data and transfers using Chainlink's CCIP. This essentially today, MasterCard going to be using the XRP ledger for real payments. This project connected MasterCard's traditional card network to decentralized systems, aiming to make blockchain settlements invisible to end users while preserving regulatory compliance. With over 3.5 billion essentially cardholders globally, MasterCard's blockchain initiative are now viewed as an attempt to integrate tokenized payments into everyday commerce without disrupting user experience, effectively making Web3 run behind the scenes of mainstream finance. For Ripple, the move is another milestone in its ongoing institutional expansion strategy, following the end of its legal dispute with the US SEC earlier this year. The company has also spent nearly $4 billion acquiring custody, stablecoin, and treasury management firms, including Palisade, which they recently brought out Ripple, Hidden Road, and G Treasury, which obviously Hidden Road has been changed to Ripple Prime now, as a part of its push to offer end-to-end digital asset infrastructure for banks and corporations. As I've said, nobody does it like Ripple does it inside the crypto sector, buying out companies to expand inside the financial sector. Nobody does that in terms of all the blockchain companies. Monica Long, Ripple president, said the collaboration shows how regulated digital assets like RLUSD can enhance settlements and pave the way for faster compliant payments. She also emphasized that the XRP ledger, long known for its reliability and speed, will serve as a technical backbone essentially for this and other institutional experiments. Ripple and its partners plan to bring onboarding RLUSD for settlements in the coming months, pending regulatory clearance. Also, so if successful, the pilot could set a precedent for using stablecoins in mainstream card payments, positioning Ripple and MasterCard at the forefront of the next phase of digital finance, where crypto infrastructure powers traditional money movements. It is a huge news with essentially Ripple and MasterCard coming together, because the way the MasterCard has done it with Ripple, they haven't done it with anybody else inside the blockchain sector. Sure, they've connected to other blockchains for different use cases, but what they're doing with Ripple is a unique one. Now, also, before we go through the next news on tonight's live, let's go through the comment section first. Let's see what's happening there, and then we go straight into the next news on tonight's live. So let's see what's happening. We are here. I think we're here. We were here. Good day, Miles and CMF. Sorry, I'm late. Mike, good to see you, brother. How you doing? No problem. Good to see you. Share the live. Let's go, Scott. We've all been around. Well, okay, we were here. Thompson, good to see you as well. How you doing? I'm so sorry for not attending on timely manner. No problem, Thompson. Good to see you. Either way, I'm so grateful to be here. Let's go, Thompson. Good evening, Miles. The CMF. Manny, good to see you. How you doing, Manny? How you been? I think that XRP will be in a world of its own, so slowly but surely. I agree 100%. XLM and XDC is not far behind XRP. I think they may be following a path already created for them. I agree as well. Miles, HBAR has been extremely quiet. What do you think is going on? HBAR is going to be following a similar path as well, to be fairly honest, but it has been fairly quiet. I agree. But it should be following the same path is what I would say. I have been dollar cost averaging XRP for the last few days, increasing my bag for a few dollars for a profit of thousands later. Just my humble opinion, not advice of any type. Let's go, Scott. Seems a decent idea to me, so I agree as well. What does swell stand for mean or an XRP Expo? It's just an XRP event that they essentially introduce to the world in terms of their new products, essentially, all the new features or what we could be expecting in terms of regulatory footstep. I like we're hearing names like MasterCard, Visa more and more inside the crypto space now. Let's go, Ronnie. I agree, more legitimacy. The main man, JP. Okay, when is XRP mooning? Davos, you got to give it some time. We're not that far off. Think of XRP as, for example, an elastic band. They're just pulling XRP back, and at one point they're just going to be letting go. Think of it like that. The best analogy I could give you right now. Now, XRP anticipates potential 2025 rally in institutional interest. Now, this is something that we talked about on yesterday's live show as well, that they're potentially seeing XRP for the next catalyst of the ETF store CEO said that XRP is potentially the crypto project that's going to be the next catalyst for the next leg up inside the market space. That XRP is going to be the one that takes the market up. And that's coming from the ETF store CEO, also from Nate, in other words, Nate Garcia. Now, market analysts and XRP key opinion leaders are speculating on potential major price rally for XRP in 2025. And Nate Goss is not the only one. I mean, for example, the ETF specialist analyst, Eric, which we talked about yesterday, he also sees XRP as the next big player going forward and essentially the next big player in terms of it's going to be the catalyst for the entire market space. And also they did mention, Nate Garcia or essentially Eric from Bloomberg, both mentioned that essentially they're going to be that XRP is going to be playing that vital role in the regulated financial sector as well, that it's going to be playing a better role because most crypto projects won't do too well in terms of a regulated market space. Now, market analysts and XRP key opinion leaders are speculating on potential major price rise for XRP in 2025, citing essentially technical indicators similar to those essentially preceding in 2024 gains. Potential institutional involvements in favorable technical setups and past value patterns fuel optimism for XRP, significant upward essential movements in 2025, impacting broader essentially crypto market trends. Predictions and indicate essentially a potential XRP rally in 2025, similar to those essentially explosive 573% rise in 2024, as institutional interest grows and technical indicators align. So it's not just CEOs coming out and saying XRP is the next big play, which they were all saying yesterday. It's also in terms of the technical analysis of the charts and analytics firms coming out and saying, we see XRP as the next big play as well. This potential rally could significantly impact the cryptocurrency markets, driven by previous technical patterns and heightened essentially institutional participation. As I revealed to you yesterday, 80% of the buyers through BIS, for example, through Bybit Exchange, are now institutional essentially buyers rather than the retail section, which is ridiculous to even think about. Institutional interest in XRP is climbing, with open interest in futures reaching $8.8 billion, for example. Such interest reflects alignment 2024 rally, signaling a promising setup for 2025. Several technical indicators mirror past conditions, notably the golden cross on essentially RSI, which has historically led to notable price increases for XRP. A weekly golden cross on the essential RSI has appeared just as before, just like the last 128 to 500% XRP rallies we've seen. Price could reach essentially $13.20 is what they're estimating. If research, essentially if history echoes, they're saying basically based on what institutions are saying, based on what the CEOs are saying, essentially, and based on what essentially the Bloomberg ETF specialist analyst Eric is saying in terms of the ETFs being passed through, or the XRP ETFs that are going to be passing through without the SEC's essentially acknowledgement through that legal loophole due to a government shutdown. With everything going through, the XRP is going to be the next big play. They're suggesting that if history does repeat itself, with everything else on the sidelines, we could be seeing XRP essentially echoing its previous footsteps and reaching somewhere near $13.20 is what they're essentially estimating as. Now, or essentially the smaller scenario would be $3.37 if the 128% scenario repeats. Watching to see if essentially the micro shifts or the liquidity conditions alter the outcome. Institutional participation suggests an essentially imminent increase in liquidity for XRP. Crypto analysts also observe correlations between between institutional flows and XRP market dynamics, making potential essentially upward trajectories. The anticipation of another XRP rally could stir market-wide interest, potentially affecting major cryptocurrencies like Bitcoin and Ethereum and benefiting broader altcoin sectors. XRP's historical surge often follows key essentially technical signals and microeconomic essentially factors. Analysts essentially parallels with past 500% or 128% gains, liking to ongoing institutional trends. Market projections based on past data also suggest optimistic outcomes if conditions continue to reflect prior successful cycles, indicating potential price targets and exceeding previous highs. So not only have we had essentially a perspective from CEOs yesterday and Bloomberg yesterday, not only are we having more CEO perspectives today, but also analytic perspectives that XRP is the next big play. In a regulated environment, XRP is the next big play going forward. And that 2025 is going to be a wild ride, and it's not ended yet for the crypto space, especially not for XRP. And the Ripple Swell event is still going on, so we're going to have more updates coming about that tomorrow as well. We have also reached the endings of tonight's live. This was episode 400 of the CMF Live, and tonight we talked about the Ripple, essentially, the footsteps that Ripple has taken in terms of where they're going to be ending up. XRP is an next big play from analytics perspective. We also talked about how essentially Ripple partnering with MasterCard is a very unique play that they haven't done with other blockchains so far in this sense. We also talked about how Ripple essentially raised $500 million through companies that didn't like Ripple on the first day, but now do. They're actually helping it essentially raise this amount of money for XRP, $500 million. We also talked about the EU expanding its footsteps, creating some sort of an SEC platform that could actually play out pretty well for the crypto space. We also talked about tonight's live regarding Tangem introducing some sort of a bank card to its users. We went through news regarding South Korea introducing some sort of loans for the crypto space and pension funds that could actually, it's groundbreaking, my point of view. That is something that's going to be played out in other jurisdictions around the world also. We also went through news on tonight's live regarding the UK in terms of their stablecoin regulations and mirroring essentially the New York up to a certain extent. We went through news on tonight's live regarding BlackRock's tokenizing market share, and we went through news regarding Trump and tariff policies and everything else to do with the market space. So this was episode 400 of the CMF Live show. I hope everyone enjoyed it. Thank you so much to everybody who liked and retweeted the live show as well. If you haven't liked or retweeted, smash the like button, smash the retweet buttons, and tune in Monday to Friday, 10 p.m. London time onwards. This is the CMF Live show. Stands for Crypto Mars Family. My name is Mars. You can tune to this live, as I said, Monday to Friday, 10 p.m. London time onwards. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So before we obviously do go, let's go start the conversation first. This was happening there. We are here. XRP according to CMC, $2.34. Swell was the word used in association with the movement of water. Yep. Night, Miles, and CMF. Pablo, could see you tomorrow sometime as usual. Great live, Miles, as usual. Good night, Miles, and CMF. Jason, see you tomorrow sometime as usual. Excellent news for XRP. Thanks, Miles. Have a great night and see you tomorrow same time. Let's go, Autistic. See you tomorrow same time as usual. Thanks, Miles, for your time and energy in another great live. See you tomorrow. Adit, see you tomorrow same time as usual. Miles, congratulations on program 400. Let's go, Scott. Thank you so much. Share the live. Let's go, Scott. Good night, everyone. Let's go, Scott. Congratulations on episode 400. See you all tomorrow. Thank you so much, Shelly. And see you tomorrow, same time as usual as well. Thank you a bunch, Miles. Good night, all. Lena, see you tomorrow, same time as usual as well. Sardinia, here we come. Let's go, funky brother. Miles, congratulations on program 400. Let's go, Scott. Share the live. Let's go, Scott. Take care, everyone. Let's go, Thompson. See you tomorrow, same time as usual. Thank you, Miles and CMF. I won't be able to watch the live tomorrow due to be flying into the Caribbean. Take care. Okay, Mike. Have a good time in the Caribbean islands. And see you whenever you get back or whenever you do tune into the live. Good night, brother Miles. Have another wonderful evening. Let's go, Frankie Brother. See you tomorrow, sometime as usual. Love you, Miles. Thanks for everything. Let's go, Scott. See you tomorrow, sometime as usual. When Bull Run, Johnny, give it some time. Good night, Miles, and all the CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual. Good night, CMF. Let's go, Frankie Brother. See you tomorrow, same time as usual. Good night, Miles. Thanks for your live shows. Well done on your businesses and can't wait to see your achievements. God bless you and have a nice sleep. And see you tomorrow, Carl. See you tomorrow, sometimes as usual as well. Thank you so much. Good night, Miles. God bless. Callie, see you tomorrow, sometimes as usual. XRP and Flair are going to have a very big wedding. Yes, they are. FX baby. Let's go. Thanks so much, Miles. And good night, all. Stormy, see you tomorrow, sometimes as usual as well. Good night, Miles and CMF. More and more exciting daily news. See you tomorrow. Let's go. I will see everybody tomorrow. Same timing as usual. Everybody have a great day or a good night, depending on where you're around the world. CMF. Like, comment, follow, subscribe if you already haven't. If you have, thank you so much. See you everybody tomorrow, same time as usual. 10 p.m., long time onwards. Love you all. See you tomorrow.